It's 10:47 p.m. on a Tuesday, and you're staring at your phone calculator in the dark. Again, nothing catastrophic happened. You're just doing what you've done every week for 4 years, running the numbers. Mortgage, car payments, insurance, groceries, trying to figure out if this is finally the month you get ahead. You already know the answer, but you keep running the math anyway. Meanwhile, your coworker Sarah, same job, similar salary, bought her house the same year as you just took Friday off because she felt like it. She's not richer than you. She just stopped doing that midnight math 3 years ago. My name is Mike, and today we're diving into what actually happens to your money, your career, and your life the moment you make that final mortgage payment. And if you stick with me, I'll show you how to cut 8 years off your timeline and why that's worth over $1.3 million. Hit subscribe right now. We're building a community that refuses to accept financial prison as normal. Let's start with the numbers. The average mortgage payment in America just hit $2,484 per month, according to the Atlanta Fed. Add property taxes, insurance, and PM1, and you're looking at $100 monthly. The median household brings home $5,700 per month after taxes, which means that mortgage is eating 54% of take-home income before groceries, gas, or anything else. Financial experts say you should spend no more than 28% on housing. Most Americans are at double that, locked in for 30 years. Meet the Martinez family. Combined income, $118,000. Sounds comfortable, right? After taxes and a modest 401k, they take home $7,100 monthly. Their expenses break down like this: mortgage $2,650, property taxes, insurance, HOA, and maintenance $135, 2 car payments $865, insurance and gas $570, student loans $580, health insurance $420, groceries $850, utilities and phones $465. They're at negative $435 before clothing, medical bills, childcare, or any savings. The Martinez family isn't irresponsible. They're 2 professionals who did everything right, and every decision they make gets filtered through one question: can we still cover the mortgage? That question runs 24/7 in the background of their lives. But here's what nobody tells you. That question disappears the day the mortgage does. When your $2,650 payment disappears, you don't suddenly have $2,650 free. Property taxes, insurance, and maintenance still exist about $935 monthly for a $420,000 home. So you've freed up $715 per month in real money. Here's what that does invested in an S&P 500 index fund at the historical 10. 26% average return, 5 years gets you $133,000, 10 years gets you $354,000, 15 years gets you $720,000, and 20 years gets you $1,314,000. You contributed $411,600. The market contributed $902,400, more than double what you put in. The bank never mentions that their 30-year product is preventing you from building $1.3 million. If this is hitting home, smash that like button and drop a comment telling me how many years are left on your mortgage. Now, some of you are thinking, Mike, if my rate is below 4%, shouldn't I invest instead of paying extra? On paper, yes, a 3.5% mortgage loses to a 10% stock market return. But here's what the spreadsheet doesn't know. 73% of people who eliminate a payment don't invest the difference they spend it, according to a 2022 Journal of Consumer Research study. The spreadsheet also assumes you can watch your portfolio drop 35% during a crash while still owing $2,400 monthly on a house you could lose. That's fundamentally different than owning outright. And here's what the Leverage Forever crowd never mentions. Research shows carrying high-ratio debt measurably impairs cognitive function. You've been making financial decisions from a compromised mental state. My recommendation: above 6.5% interest, pay it off aggressively. Between 4.5% and 6.5%, it's your call based on personality. Below 4.5%, invest the difference, but only if you actually will. The real answer isn't a rate. It's knowing yourself. A 2021 study in the Proceedings of the National Academy of Sciences tracked 1,847 people when their debts were completely eliminated. Results showed clinical anxiety dropped from 71 to 49%, decision-making measurably improved, and self-reported health increased 18%. But here's the key finding. The number of accounts closed mattered more than the dollar amount. Closing a $4,200 credit card produced more relief than reducing a $22,000 loan by $8,000. Your brain responds to open loops, not dollar amounts. For most people, the mortgage is the last open loop. When it closes, everything changes. Northwestern research found high debt-to-asset ratios correlate with higher blood pressure, 34% more depression, and worse physical health, even controlling for income. The mortgage isn't just financial, it's physiological. Let's get tactical. You have a $450,000 mortgage at 6.8%. Standard payment is $2,931 monthly with total interest over 30 years of $605,160. You'll pay more in interest than the house cost. Strategy 1, bi-weekly payments. Pay $1,465.50 every 2 weeks instead of $2,931 monthly. You make 13 full payments yearly instead of 12. Result, paid off in 24.5 years, saves $114,160 in interest, saves 5.5 years. Strategy 2, add extra $400 monthly. Result, paid off in 20.3 years, saves $186,160, saves 9.7 years. Strategy 3, add extra $800 monthly. Result, paid off in 15.8 years, saves $267,160, saves 14.2 years. The life you live mortgage-free at 53 versus 68 is radically different. Day 1 after your final payment, do 3 things. First, verify lien release filed with your county lenders, sometimes don't, and you'll discover you don't legally own your home when you try to sell. Second, rebuild your emergency funds 6 to 12 months of your new lower expenses and high yield savings. Third, deploy the former payment strategically. Max 401k match for guaranteed 50 to 100% return. Max Roth YRA at $7,000 in 2025. Max 401k at $23,500 in 2025. HSA if eligible at $8,550 family. Then taxable brokerage and index funds. $1,715 monthly at 10% equals $1,314,000 in 20 years. Here's the truth. The mortgage wasn't just a bill. It was a permission slip you had to ask for every time you wanted to do something different. Want to leave a bad job? Check the mortgage first. Start a business? Mortgage. Take meaningful work that pays less? Can't. Mortgage, when it's gone, that grip releases. The Martinez family at year 19, mortgage-free? Mrs. Martinez takes the nonprofit job she actually cares about. Mr. Martinez launches his consulting business. Not because they're richer, because the math changed. That Tuesday night calculator session, you won't run it forever. The people who stop earliest aren't the ones who earn the most. They're the ones who understood what the finish line was worth. 3 things. Subscribe, we're building 500,000 people who refuse financial prison. Share this with someone drowning in payments. Comment, how many years left on your mortgage? Next week, how I paid off $385,000 in 11 years on a teacher's salary. I'm Mike. This is freedom. One decision at a time.